folks, I'm fired up. Yes, I'm fired up. It's like we have an agenda being pushed against long-term investors right now. I guess we all better become traders. I want to react to this video with you guys. Then we're going to react to this video here that some interesting comments are made. And I have this kind of ready, and I have this ready because we're going to talk about that. And lastly, we're going to get off with this one here, okay? And what's going on with that whole situation. So let's jump into this. Hope you're subscribed already.
At ARK, down 58%, we'll call it, off the year high. She was with us yesterday. She defended her stock picking prowess. She defended her research. She was defiant in terms of saying, yes, these stocks were in a bubble. And she claimed many are in deep value territory. Listen.
We believe our portfolios are extremely undervalued. You have to have a 5-year investment time horizon. And if an investor is looking for return.
I did a full reaction to this entire interview, by the way, yesterday on the channel. So if you want to check that out, it's on there.
Over the next quarter, the next 2 quarters, we can't promise them. Nobody can promise them. That's a macro call these days. However, if you give us 5 years, I will tell you, we are running a deep value portfolio.
Steph, she said, we right now have, quote, one of the most misallocations of capital in the history of mankind. Conversations about valuation don't seem to really matter with Cathie Wood. She maintains this 5-year time horizon. So checking her on a lot of stuff like that remains difficult, right? Because it can always be the fallback. Well, our time horizon's 5 years, so who cares what the stock does now? If you buy these stocks today, you're going to be supremely happy in 5 years because you've made a tremendous bet.
No, before we get into this video anymore and I get really fired up here, I just wanted to show this because I thought it was worth referencing. And then once again, I have no money invested in ARK Fund, not 1 penny invested in ARK Fund. But I want to give them a fair shake in this situation. Do keep in mind their 5-year has significantly, even after this massive crash, has significantly outperformed the S&P 500, even on a 3-year basis as well. I think that's some food for thought, before they get all, crazy about this. The fact is they've been killing it even after this crash, right?
Or seeing it that way, you're simply missing the boat. I'd love to get your take on the points that she makes here about a lot of these stocks, which many of our viewers have owned and unfortunately have ridden down so far.
Yeah, anything can happen in 5 years' time. That's impossible to gauge, right? So momentum is really good on the way up, but on the way down, you're catching a falling knife. There's no valuation support. And so when you're looking at price to sales, total addressable market, which I have also done in terms of trying to see big picture and where their market share of certain companies can go, But the market doesn't want that right now. They don't want the non-earners right now. There's no way to value these companies other than to think about out.
It's not just the non-earners. The stock market's selling off everything. We've seen low P stocks. Look at Meta. Meta's under a 15 P ratio now. You look at PayPal. It's trading the cheapest it's traded at, and pretty much ever. Amazon's trading pretty much the cheapest it ever has on valuation metrics. So I think it's once again the market trying to misguide things is like, oh, it's just those crazy speculative stocks that don't make any money. It's like BS, man. It's a whole bunch more than that.
5 years, what the markets are going to look like. And again, especially in technology, things can change on a dime. Look, you go back to Amazon. It's actually trading at 45 times earnings. I think that's one of the cheapest it's been in a very long time. And that can't get out of its own way because the investors in the market right now, they're not rewarding high multiple stocks. Maybe they will, especially if the economic...
They're not rewarding anything right now, to be quite fair. But yeah, they're definitely not rewarding anything with major growth and higher, price sales ratio, PE ratios, but there's really nothing being rewarded in this current market.
Maybe we get back into growth. But right now, I think these stocks, there's no way of knowing how much they're going to go down. And I hate to pile on because I do think she's very bright and I do believe in a lot of the things that she says. However, I don't even have a 5-year time horizon. I don't think that's a prudent way of investing, quite frankly.
Oh my gosh. Okay, so it's not a prudent way of investing. Well, if you're not talking about at least 3 years, if not 5 years, you're not investing. You're not investing. Like that's the whole thing. If you're talking about a stock over a weekly span, a day span, a weekly span, a monthly span, or even a year or two, that's not flipping flapjack and investing. Investing is, I'm buying the stock because I believe it's going to do ... over the next 5 years. That's true investing, right? And Warren Buffett would say that's not even long enough. Warren Buffett's like, hey, you got to be 10 years. You got to hold that. You take that stock to the grave, right? So this whole notion that in all due respect, this lady brings up here is just, it's a bunch of BS in my opinion. Like, if as investors, we are almost trying to be like, kicked when we're down, essentially, right? Market's gotten rough. Russell's been right around bear market. And here they are like poking at us saying, no, don't look at the 5-year time horizon. That's ridiculous. What are we supposed to look at? The next month? The next 3 months? The next 6 months? Like, what do they want from us, essentially? To try to do what they do, which is why they always underperform the market every year? Try to chase around the benchmarks? Dude, if I want to chase around the benchmarks, I'll just put my money in an S&P index fund and I'll just call it a day at that point. Like, it's not about chasing. Like, we go because we're trying to outperform the market, right? We're betting on stocks over the next 5 years, over the next 10 years, right? Not, let's try to get in and out. Let's rotate our money here. Let's rotate our money there. That's why all these jokers end up underperforming the market consistently, because they have no clue what they're doing. They're trying to chase around benchmarks. And it's like, for what? So they can collect their commissions and their fees on all these things? If you're going to do that, like I said, just get an S&P. That's why they can't beat the market ever. You have some dang conviction in your stocks. Believe in a company over the next 5 years because you've done a full amount of research in that. And if you can't do that, then you're not built to be an investor. Then just go ahead and trade stocks. Or you know what? Don't trade stocks. Put your money in an index fund at that point in time because you're clueless anyways. It's ridiculous, man. And it's very easy to poke somebody when stocks are going down in the short term. Very, very easy. But what they aren't showing the fact that ARK has destroyed the S&P 500 over the past 5 years. They're not showing that part. They're showing it's off of the 52-week high was here, and this is where it's at today, and And it's like, what about over the past 5 years? And wait till the next 5 years, right? And so I think it's just an easy kind of kick them when they're down type situation. It's ridiculous.
I mean, if you just look at some of the stocks, right? Not everything is going to get a 5-year time horizon. There's just not enough patience to go around to sit on big losses,
and that's a problem.
And stay with the program.
That's a problem. That's a problem in the stock market. And when you're having people tell you you're not doing it right, you need to be looking at it just from the short term perspective. That just adds more fuel to the fire in this situation, right? I've been doing this for 14 years. I have yet to see one company have great numbers over time, grow their revenue massively over the coming years, grow their net income over the massive years, and the stock price not reflect that over time. I've yet to see one company ever do that. And so the fact is, if you stay with a great company, they're gonna grow, and I've never seen it where a great company hasn't gone down. I don't care if you're even talking about the best of the best. I don't care if you're talking about Apple. There's been a ton of time periods when Apple was kicked when it was down 30, 40, 50%. Amazon, same exact situation. Google, Meta, several times, right? I've seen every single one of these stocks go through these time periods where the market downtrended or that specific stock downtrended for whatever reason was the reason at that particular time. And they all ended up reflecting correctly over time. You just have to let time play out.
Palantir sold about 5 million shares of Palantir. That's after loading up on it in recent months, and that's with an earnings report and a stock that's gotten absolutely obliterated. There it is, 63% off of its high. That's on Roku, which is in the innovation fund. She defended it yesterday. That's a stock that's well off of its high. Look at that, 77.5%. That takes us to DraftKings, which is another stock that's absolutely getting hammered today. You take all three of those in context of the greater Cathie Wood story, and I'm wondering what you make of it and the conversation that we had yesterday, in which I know you heard all of it.
There's a dynamic in play here that there really is no precedent for. One of the things that ARK is doing that's different from every other active manager in history that's ever gotten to 50 billion in assets is they're playing poker with their cards face up. Every night, we know what all of ARK's trades were. We know what they're adding to. We know what they're selling. That's why you guys in the media cover ARK so much. So it actually was working in their favor on the way up. They would announce that ARK just bought XYZ stock, and a whole army of retail traders would get that news from CNBC, Bloomberg, MarketWatch, Yahoo Finance, and that would almost act as amplification, driving more people to buy those stocks also. And so there was like this halo effect of ARK's latest buy is whatever. So that was great. That went really well for a long time. Raised a lot of money that way, raise your profile, et cetera. But unfortunately, we're seeing that same process works in the reverse. So everybody knows their holdings, and everybody knows that there are redemptions and that there's money coming out. Not every day, but everybody understands that they're not raising $10 billion a month or $10 billion a quarter the same way they were in 21. So if you know that and you're a trader, you have the ability to shoot against those holdings, and you have the ability to even press shorts on those holdings, depending on your level of sophistication. So we've never seen that before. You think about a famous active manager like a Bill Miller, even if he gets himself into trouble and the Legg Mason Value Trust has net redemptions, you don't really know what his holdings are or what his trades are, because he's filing 45 days after the end of the quarter. So a transparent, actively managed ETF has this additional handicap that works against it in an environment like this. Right. And I don't know how that spiral ends, but it's tough.
And I like Josh Brown, by the way. He's somebody I like on that. And I agree with them. It's when things are going great, you have this kind of like halo effect, right? And when you disclose, I just bought 1 million shares worth of this stock, everybody's like, oh, okay, let's buy. And it kind of sends the stock up, and it's kind of like this great cycle you're in. Well, that cycle's broken completely. No one, I don't want to say no one cares what Cathie Wood's buying, but no one's out there making moves now based upon what Cathie Wood's buying. Maybe they're shorting based upon those moves now, but no one's like, oh, shoot, Cathie just bought 1 million shares worth of this. Buy. That was maybe a year ago, 18 months ago, that was going on. Today, that's the last thing going on right now in this market. And so, I think he brought up a good point there, but the whole, this like movement against long-term investing and stock picking, things like that is just disgusting. But it happens in this sort of market when stocks are going down, it's such an easy target.
Nathan from Risk Reversal Advisors. Dan, good to see you.
Mel, great to be with you.
So Staples, the only winning sector on the week, up 1%. We were talking to Brian Kelly yesterday, Beakers. He said that
that's a sign of just Wall Street money just flooding to safety, or what they view as safety, right? Which might not be safety long term, but that's what they view as safety right now. And we know where, Wall Street's head is. It's like that lady, like, I can't think about 5 years from now. I got to go to wherever, is the best place for my money right now today. We heard the way Kramer was talking last night, right? I did that Cathie Wood video. You heard the way Kramer was talking. It's the way all these people on Wall Street think, and they like, I got to sell out of this. Oh, it's going down. And put my money in this thing that's going up. It's ridiculous.
Philip Morris, which seemed nuts to me. What's your take on the markets here?
Yeah. When by the way, when people are flooding to Staples, and like she just said, Philip Morris. You want to talk about a market where there's no greed in that sort of market and there's ultra fear? Yeah, when people are flooding their money to the Staples and to Philip Morris, believe me, you're in a scared stock market. Let's just put it that way.
Don't smoke. Stay in school, kids. I'm not with Beeks on that one here. Listen, this was a really interesting week for me because if you look at a lot of those macro assets that you thought might have been moving around because of all the uncertainty with what's going on with Russia and Ukraine, I think it's interesting that we end the week with the dollar basically flat, with rates a little bit lower than where they were just a couple days ago. The 10-year U.S. Treasury yield was well above 2%, now closed at 1.92 or so. The VIX was actually down today. So, crude oil was down, Mel. So it didn't look like we were raging on risk assets, risk off sort of things, other than high valuation tech stocks. They just continue to get bludgeoned here. And I think last week when I was on with you and Sarah, I said it is not over, and it's not going to be over for these names. And listening to Cathie Wood yesterday with Scott Wapner, I thought was really interesting. She made a lot of great points, except one, in my opinion. When you see such a large part of the market where so much positive sentiment was kind of encapsulated in, and they crash, and that's what's happened. They've crashed. A lot of these tech names, they're not coming back anytime soon.
Ooh, okay. Let's talk about that for a moment, okay? Not coming back anytime soon. So, I mean, if we look back at, some recent, let's call it, since I've been in the market, some crazy times, right? Dow bottomed out, I think it was actually 6,700. It was around February, March of 2009. And you could have said at that time, these stocks aren't coming back anytime soon. Well, shoot, okay? So from 6,700 roughly to next thing you know, 11K by basically the next spring. So a little over a year. And the market jumped, that would be 50+%. From the lows of 6,700. And that's the entire market, right? Now, keep in mind, if the market goes up 50+% in a matter of a 12-month span or 14-month span, keep in mind, there's going to be countless stocks that have doubled up, tripled up, quadrupled up over that time, especially a lot of the smaller market caps, the mid caps, those sorts of stocks. So I'd be a little scared to say it's not coming back anytime soon. If we looked at, for instance, the December crash, which, things got pretty nasty there. I think we bottomed out at technically 21. It shows 23 here, but we bottomed out in the 21 range. And then the next thing you know, from 21 to we were at 26 by April of 2019, a matter of a few months later, and the Dow had already jumped another, 5,000 points. So I'd be kind of careful when it comes to just saying like, none of these stocks are coming back anytime soon. Maybe they're not getting all the way back to where they were before. I think you should have clarified that. But to assume some of these stocks in a matter of a year could go up 100%, 200% from where they're at, I don't think that's a stretch out of the imagination at all.
Jones earlier also, Dan, and I thought he made an interesting point in terms of his take on Cathie Wood. And, he said you have to acknowledge the role of liquidity and all the excess liquidity and what that has had on some of these areas like ARK Innovation, for instance. You have to also acknowledge on the way out when the liquidity is coming out that this trade may not get back. But for traders, it doesn't need to get back to those levels. If you're in now, you can still see a 50% bounce.
Yeah, you can see a lot more in that. Think about like something like a Teladoc. Teladoc was trading for $60-something a share. If you're looking at Teladoc and you don't even have to believe it's going to be a $300 or $400 stock like it used to be, right? If you believe it's going to be a $120 stock, based upon what you think the revenue is going to over time and what you think a fair price to sales ratio would be, or if you're looking at the profitability metrics, which, for Teladoc is many years away. But let's say you were looking at that and you're like, I think it's going to 120 over the next 5 years based upon what I think their net income is going to go to, right? And what they can command for a valuation at that time. If it goes to 120, you just doubled up your money. So, definitely some food for thought.
No doubt about it. And there's been plenty of bounces like that of names that have been down 50, 60, even 70%. You can make a lot of money if you can be nimble and you can pick a bottom. I'll just say this, and I think Victor makes a great point. You don't
have to pick a bottom also. I want to push back on that. You don't have to pick a bottom in stocks. If, let's say Palantir, let's use that as an example. Palantir is trading at $10-something a share today. Dude, if Palantir is going to $30, $50 over the next 3-5 years, and a lot of people would say those numbers are way too low, but let's just say, for instance, that's your bullish thesis. Like, I think this stock's going to 30 to 50 over the next 5 years because I think their revenue is going to this or net income's going to this, so you should be able to command this type of PE ratio. Okay, fair play, right? If you're buying Palantir at 10, 11, 12, 9, 13, it doesn't matter. You make a bunch of money in the end anyways. You don't have to pick a bottom. And it's such another one of those things that just drives me crazy. You don't have to pick a bottom in it.
Thing that she had to say is divorced of the reality that with a rising rate environment, investors are going to pay less for that decelerating growth that a lot of these companies are seeing. I'll tell you this, the most important thing that I saw happen in the stock market this week was NVIDIA reported a really good quarter. It gave a great guidance. Investors sold it. It's been 10% in the last 2 trading days because what? They didn't like flat margins on a company that just guided up revenues, basically 10% in the current quarter, $600 billion market cap company that had north of a 20 times sales multiple just a few days ago. So to me, the reaction to that result is really important. Keep tracking that. If we lose some of these sentiment winners that are still relatively holding up, that Apple, Tesla, NVIDIA, obviously a few others here, then we're in for some problems.
So Dan, where are you exposed then? It sounds like you're not touching tech. So where are you?
Listen, I will tell you this, Sarah. I think the QQQ, the NASDAQ 100, we know 6 stocks in that index of 100 stocks make up 45% of the weight. And again, if we have Microsoft, Apple, we've already lost Facebook. If you have Alphabet, Tesla come in, then the QQQ, the NASDAQ 100 is going to be the single best trade. Forget the ARK Innovation ETF. You buy the QQQ because you're going to get these massive companies that have corrected 20, 30%, and they're going to be the leaders on the way out.
Problem is, there's a lot of stocks that haven't really corrected that hard in that index, and Cathie Wood was going through that yesterday. Apple, Microsoft, stocks like that haven't really corrected that hard, right? There's a lot of not even true tech companies in the NASDAQ.
But then to Mel's point, you're going to get the dozens of stocks that are truly innovative, but their valuations got way out of whack over the last 2 years, and you're going to get the benefit of them rallying 50% over a year or two. Never getting back to those prior highs, but they're going to have really nice rallies. That's how I would be thinking about legging in to tech stocks and innovation over the next 3 to 6 months as the market tries to bottom.
I would be careful with that statement he just said. They're never getting back to their highs. I mean, there's a lot of stocks that even in the tech bubble you could have said that with, right? Amazon was down, I think, 93% at the lows, from what I remember Jeff Bezos said, right? I think that's a dangerous, it's like dangerous last words to say they're never getting back to these highs. We'll see. We'll see. Maybe not tomorrow. They're certainly not. Maybe not this year. They're not. But believe me, crazy things can happen in the market. I remember recording a video up in the loft of my old house in Henderson. And I remember this was March of 2020. I said, guys, I've come to the conclusion my, the public count's going to be really, really negative this year. And it's just going to be a bad year for me. And then the rest of 2020 ended up being a great year. So, it's like famous last words, like don't be so sure about predicting that these stocks never get back to, where they used to be. I would say that.
Innovative stocks are you keeping your eye on? What's on your radar?
Listen, I think Zoom is really interesting to me. It's below 10 times sales now. That was a company that was trading north of $100 billion market cap that was trading over 30 times sales. I don't care what you think the work environment, the hybrid environment is going forward. That is a feature that a lot of people will be using from here on out. A lot of the competition from some of their major competitors, the big platform companies, really haven't made it a dent. It was a valuation issue dealing with decelerating growth. So that one's going to be really interesting. To me, I also think that, NVIDIA.
Zoom's profitable now, so I don't even think you should be really looking at it from a price to sales ratio. I think that's like the old Zoom, but Zoom's a profit machine now. So let's go ahead, let's pull up that profit. So as far as Zoom, they're trading at a 31 forward P. So yeah, certainly not high compared to where they usually trade at. But you can still say, in this market, it's like everything's too high. Even at 31, I'm sure for Zoom would be too high. I mean, that's just the way, kind of the market we're in right now. So
Again, I'd love to see that stock's down about 33% from its highs in November. You get that thing back down below $200. That's where you want to be in the semiconductor space there. So to me, I just think that the legging into the QQQ makes a lot of sense as we continue to see a downdraft. That thing's down about 15, 16% from its all-time highs made in November. You want to see that, at least 20, 25% from the highs. That's when you really start getting in there.
In this sort of market, it's very convenient. Everybody's like all of a sudden index funds or just buy the QQQ and things like that. And that's when you're in a fear-driven market, people get very, very scared to stick their head out there when it comes to an individual stock because they just see stock after stock hit new 52-week low, new multi-year low, new all-time low on these stocks. And so people get very, very gun-shy about calling out this stock or that stock. And it's very easy to say, hey, throw your money in QQQ, throw your money in index fund because, people are just scared in a scared market. That's like the easy thing. The even easier thing is cash, right?
Look, we have reason to believe the Russian forces are planning to and intend to attack.
This is from about an hour ago or 2 hours ago.
In the coming week, in the coming days. We believe that they will.
To be fair, they did say that was going to happen this week, and they never made a move. So I just want to clear that up.
Ukraine's capital, Kyiv, a city of 2.8 million innocent people. We're calling out Russia's plans loudly and repeatedly, not because we want a conflict, but because we're doing everything in our power to remove any reason that Russia may give to justify invading Ukraine and prevent them from moving. Make no mistake, if Russia pursues its plans, it will be responsible for a catastrophic and needless war of choice. The United States and our allies are prepared to defend every inch of NATO territory from any threat to our collective security as well. We also will not send troops in to fight in Ukraine, but we will continue to support the Ukrainian people. This past year, the United States provided a record amount of security assistance to Ukraine to bolster its defensive. $650 million from Javelin missiles to ammunition.
That's something, man. There's some people that have a lot of problems with that. Like, why are we giving all that money to Ukraine? $650 million worth of stuff, right? Some people don't have a problem with it, but I can tell you there's a lot of, folks I know that are taxpayers that are like, why are we doing that again?
We also previously provided $500 million in Ukraine and humanitarian aid and economic support for Ukraine. And earlier this week, we also announced an additional sovereign loan guarantee of up to $1 billion to strengthen Ukraine's economic resilience. But the bottom line is this: the United States and our allies and partners will support the Ukrainian people. We will hold Russia accountable for its actions. The West is united and resolved. We're ready to impose severe sanctions on Russia if it further invades Ukraine. But I say again, Russia can still choose diplomacy. It is not too late to de-escalate and return to the negotiating table. Last night, Russia agreed that Secretary of State Blinken and Foreign Minister Lavrov should meet on February 24th in Europe. But if Russia takes military action before that date, we'll be clear that they have slammed the door shut on diplomacy. They will have chosen war, and they will pay a steep price for doing so, not only from the sanctions that we and our allies will impose on Russia, but the moral outrage the rest of the world will visit upon them. There are many issues that divide our nation and our world, but standing up to Russian aggression is not one of them. The American people are united. Europe is united. The transatlantic community is united. Our political parties in this country are united. The entire free world is united. Russia has a choice between war and all the suffering it will bring, or diplomacy that will make a future safer for everyone.
Well,
thanks for watching our YouTube.
No, we're not subscribing. We'll see what happens with this whole Russia situation. It's exactly what I knew was going to happen. They were going to drag it on. And that's exactly what's going on. And it was like, they're going to make a move this week. That move never happened, right? Which we should all be happy with. And then now it's like, we're going to make a move next week, and we'll see. And that meeting's supposed to happen on the 24th. We'll see what comes of that. But yeah, I mean, from this situation, it just feels like something that's just going to keep dragging out, and then it's going to be like they're going to make a move next week, and then the next week, and we'll see. We'll see what happens. Hope for the best, prepare for the worst, as they say. But what I don't like is the all-out assault on individual investors right now, true investors, people that are investing in companies for the next few years, because we're under assault right now, and it's unfortunate. It's unfortunate, but it is what we're having to deal with right now. And where will these people be when the market turns and when a lot of these stocks start beasting? They'll be long gone. They'll be on to something else, right? But for now, they're having fun, poking fun, and then talking about trying to trade this and trade that. Are they even trading it correctly? Like that's a big question I have. Are they even trading this correctly? Okay, they got out of this stock. Are they even trading it right? How are the results so far on that? Right? It gets hard to, if you're like out there and you're like investing in certain stocks and you're transparent, like let's say Cathie Wood, very easy to attack them because they're in this stock, right? But with these individuals that go on TV, they make it sound so easy. Like, this is why you can't do this. You got to get in. You got to get and it's like, well, are you really doing good with that strategy? Are you beating the market with that strategy? Well, what's going on with all that, right? So I think that's some more food for thought. Anyways, guys, hope you enjoyed this as always. Much love as always. Stay focused on the long term. Don't let all the crap distract you in the short term. And peace.